Alright, what's up everyone, and welcome back. In our last episode, we talked about how to get back into a move that's already in progress using the continuation model. And today, this video is going to be about SMTs, or smart money technique. It's not really a strategy on its own, but it's a really powerful confirmation that you can have for your entries. So, because this is a core part of trading with the algorithm, so SMT stands for Smart Money Technique, and it's really all about just finding like a crack in the correlation between the two assets that are supposed to move together. For instance, Euro USD and GBP USD for the indices, the Nasdaq, ES, and Dow Jones. So when they don't move the same way, it's the smart money showing its true hand, and so what you need to be looking for is divergence. So a bearish SMT happens when one asset makes a new high, but the other correlated asset fails to do so and makes a lower high. Exactly as shown as here. So this is Nasdaq. Nasdaq took out this high right here, creating a higher high, and ES failed to do so. You can see ES is right here. It created a lower low. And a bullish, let's go back. Bullish SMT is the exact opposite. One asset makes a new low. So let's say this is also Nasdaq. It took out this low and created a new low right here. And the other one fails to do so and makes a higher low, right? And usually this divergence tells that the market is ready for a reversal, but I wouldn't recommend trading only with SMTs. Yes, you can keep an eye on it. Of course, there are many variants of SMTs, such as sequential SMT, but I am not going to get into that in this course. And basically, SMT's purpose is a sign that the market is ready for an expansion or a big reversal. So as you can see right here, what did the market do? Right, Nasdaq took the high, and what was the next move? Fell down, right? So accumulation, manipulation, distribution, and ES failed to do so, but followed Nasdaq. So yeah, it basically confirms that the accumulation and manipulation phase is done, and that the market is ready to distribute. This divergence is the key that unlocks smart money intentions. So let's get into the chart and let's find some SMT examples. So here we have our first example of SMT. So I have the Nasdaq open and E-mini SP. You can copy these settings if you want to. So I select the second one and turn on everything except the symbol. So let's look what is happening right here. So you can see Nasdaq took out this liquidity right here, and ES failed to do so, creating an SMT, and it should be this candle actually. So let's work this out. So SMT, and something right here, SMT. Let's look on a bigger picture. What is happening? I am on the 15 minutes, but okay, maybe if we go, it's 5 minutes. It's better, right? Okay. Yeah. Well, now this looks just much harder. Okay, let's move on to 15. So what we can tell from this is that where was market open? So 9:30. It's an AM candle right here. So what was the move? Accumulation, manipulation, distribution, right? So if I play it out, yeah. So accumulation, manipulation, distribution. This is looking at 15 minutes and it's the same thing on ES. Right, accumulation, manipulation, and distribution. Okay, so let's look at our next example. Now we have a, so what's happening right here? So ES made a higher high, taking out this high. And Nasdaq failed to do so, creating a lower low. So we create an SMT, and on Nasdaq it is hard to see, but on the ES, what we can see is all of this is accumulation, right? All of this is accumulation, manipulation, and distribution. Let me change the colors, right? Can I change it? Oops, not that. Distribution. And what did the market do next? Reversed and started going in a downtrend. For an SMT to be more powerful, we need to, oops, we need to see this distribution, right? There. So we need to see this. So again, accumulation, manipulation, and distribution. So and and distribution. And what we can see from here, let's look on ES, it's better. It is exactly the same thing, just reversed, right? So exactly, okay, let's go maybe to 30 minutes. Just going to make it better, right? So ranging, nothing's happening. We start going upwards, creating a manipulation. We took this high right here and distribution to a bearish market. I mean, it's as simple as that. There's really nothing more much more to talk about it. You don't need to overcomplicate it. Um, there is nothing much more to it again. So, okay. So tomorrow's episode is going to be about the continuation, no, the importance of the AM candle. Um, I didn't add SMT here, so we added SMT, and tomorrow's video is going to be about the AM candle. So we're going to go back on the bias, talk a bit about the more about the bias, and also adding today's episode and the previous episodes. So, anyways, guys, thanks for watching, and I'll see you tomorrow.